And today we are going to be covering the July CPI data report, or I guess I should call it the June CPI data report that gets released on July 13th today. So the report is going to be released in about 9 minutes. I'm going to start sharing my screen so you guys can see exactly how it is the market reacts. And I am going to be breaking down the CPI data report in a very simplistic way. So just wanted to make sure that we are live ahead of time. If you have any specific questions that you would like to ask me, then feel free to do so. Friendly reminder, if you guys are new to the channel, make sure that you guys subscribe, especially if you're new to the overall stock market. I upload new videos every single day. If you ever have any questions that you want to ask me, the first link down below is our free trading group chat via Discord, and you're more than welcome to direct message me at any time. So what's up? Good morning. What's going on, Nicholas? What's going on, Darren? We got Stephanie in the house. Yo, what's going on? Carlos from Miami, 8.3. All right, expected CPI numbers for this report. According to the set expectation that I read, it is 8.8%. So they're expecting a 0.2% increase. And I'll break this down. They're expecting a 1.1% increase, but then they drop off the previous month and then they add the new one. So it ends up being about 8.8%. Trust me, I'm going to break this all down, and I like to explain things in a very simplistic way. I'm sure if you've been following my channel, it's something that you're well aware of. And again, the CPI data report is set to be released in just a couple of minutes. So it's going to be pretty interesting to see how the market reacts to it. So I hope that you guys are pumped for it. And again, it's crazy how many of you guys are actually tuning on in, because first off, I mean, it's freaking early, right? It's 5:23 a.m. and if you're in Hawaiian time or whatever the case might be, I don't even know what time it is over there, 2:30, 3:30. So I want to give you guys a round of applause for waking up, putting in the commitment, and seeing how the market reacts, because you definitely don't need to do so. So just like I know a lot of you guys are going to be thanking me, I am just congratulating you for taking initiative, holding yourself accountable, which is a huge step of not just being an entrepreneur, but definitely a trader itself. So 7:30 my time. Yeah, if you're in the East Coast and it's about to be 9:30 or it's 8:30, I don't feel as bad for you, you know? You're kind of spoiled right now. Right now it's 8:23 p.m. at Singapore. I love it. That is too good. Alrighty. One of the things that I wanted to explain very quickly, if it's okay with you guys, I wanted to explain kind of like how it works. Like, how are we expecting a 1.1% increase, yet we're currently at 8.6%, but we're only expecting to go up to 8.8%. So how this all works out is we drop off the previous month, and this would mean that we drop off the month of June, and obviously May is not even in the equation. So May is not even in the equation, but we drop off the month of June. June had a 0.9% increase. That's pretty significant, right? So they expect a 1.1% increase, which is a difference of 0.02, right? And then that is where we get the 0.02 plus the 8.6, where we get that estimated 8.8%. And again, it's, I don't know why they make it sound super confusing. Excuse me. I don't know why they make it sound super confusing, but I just wanted you guys to have a better understanding of how are we adding or expecting an increase for the month of June of 1.1 and an overall inflation of 8.8. You know, if we're adding 1.1 to 8.6. So if you're still confused, please, I hope that you know that you know, more than welcome to ask me any questions within the live chat. And or if you're a little shy because you're a little bit newer to trading and you don't want to ask me in public, again, please just send me a message via Discord or via Instagram. And also, I finally got verified on Instagram, and it's the third or fourth link in the description of this video. It's my only Instagram account. So I hope that you guys know that all the other Instagram accounts that pretend to be Ricky Crypto, Ricky Forex, I don't trade Forex, I don't trade crypto, I don't manage money for other people. I will never message you asking for your WhatsApp or anything like that. I have one account and it's verified now and it's linked down below. If there's another account that followed you, I do apologize. Please just report it and just say that it's impersonating me. So, all right, where are we at right now? We have about 2,000 of you in this live stream. How many likes do we have? What do we have? We have, I can't even see the likes. I think we have like 200, right? Only 200? Damn, thought we would have done a little better than that. There it goes. So, you don't trade Dogecoin? Come on. So let's go. What's going on, Bradley? What's up? What's up? We're testing right now 1.8% on the day. All right, give me one quick second. Let me get this all ready for you guys. I just want to make sure that I am ready to see what the market reports with the CPI data report. So I have, there it goes. So I have my site pulled up, and what I will actually do is, you know, our goal is always to make you guys self-sufficient, right? So I'm going to actually post the site for the Bureau of Labor Statistic, and you guys can actually, if you wanted to, I'm going to pin it, so hopefully it should show up on your guys' top of the live chat. So if you guys want to go to the website yourself and see the numbers and be able to download the PDF, I don't want you to have to be squinting in front of the screen. And I'll show you once it's actually released. I mean, this is the website and how it looks. So, yeah. And you're just going to click download PDF, but you can see that the last update was last month, so we're waiting for this upcoming month to be released. So, all right, guys, we have 2 minutes left. 2 minutes left until it is released. And again, what do you guys think? I want to see in the live chat. What do you guys think? Do you think that will be above or below 8.6%? Friendly reminder: the expectation is 8.8%, so 8.02% increase. What do you guys think? So yeah, above 9. Wow. Okay, below 8.3. All right. Not bad. We have a lot of people that actually think that it's going below. Okay. I'm excited. I'm excited to see which way it goes. I wasn't even really able to sleep. I'm sure you guys could see it through like the bags under my eyes of this CPI data report. I mean, these things just excite me, right? I think it's just exciting that we're living in a time right now where, you know, it's maybe not this month, but maybe next month, where hopefully inflation will peak, right? And that's the set expectation that a lot of analysts have as oil prices are finally beginning to drop. So I'm excited because that means that this bear market is finally coming to an end, because when things aren't getting worse, then they're simply getting better. And here it goes. A couple of seconds left until the CPI data report is released. Again, please, if it's not too much to ask, make sure you destroy that like button and make sure that you guys subscribe if you guys haven't done so already, especially if you're new to the stock market. I upload new videos every single day. Let's see which way we go. There it goes. All right, you guys ready for this? Ooh, there it goes. Reacting in a bullish way. Let me go ahead and refresh this. I'm going to move this out of your way so you don't have to see it. But, oh, nope. Turning around. Oh, which way are we going? Wow, look at that. Selling off. So it has not been up to date on my side. There it goes. Making new lows. 24.68. Let's see which way are we reacting. I do not have the number yet. There it goes, dropping big time. We have a couple people in the chat saying 9.1, 9.2%. That's a significant jump. Is it 9.1? All right. All right, let's go ahead and try to download that CPI data report. 'Cause 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 Oh, there it goes. It was a 1.3% increase. Let me go ahead and I will actually show this. So definitely much worse than anticipated. So here it goes. In June, which is what's reported in July, it says that all consumer rose 1.3%. Remember, the expectation was 1.1%. With the seasonal adjustment, this rose a total of 9.1% over the last 12 months, not seasonally adjusted. Let's go ahead and download it. All right, let's break it down. And there we go. One of the biggest jumps that we've seen of 1.3%. Remember, we dropped to the month of June. We added the new one. And let's see where the market's at right now. Did we just make new lows? No, I think TQQQ has been at lows of 23 or 21, right? Let's look at that 1 minute time frame. We're still reacting in a pretty crazy way. So watch out for the potential support. But I thought I would break this one down for you guys. What do you guys think? So is it seriously 9.1? So again, one of the things that you guys have to understand is that it's 9.1, not including, so that's including food and oil, right? There's a thing that they call core inflation, and that's the removal of energy and food. So I think that is kind of the upsetting part, where all items less food and energy index rose to 5.9%. So core inflation was actually dropping month over month for 2 consecutive months. This would have been the third one. And we actually, at 5.9%, are seeing an increase. So I think that's where and why the market is dropping the way that it is because of how significant that is, where it's showing that things are worse than anticipated, at least for the month of June. Let's go ahead and break down the energy sector. So this looks super confusing. I reassure you, it's not confusing at all. Here it goes. Let's go ahead and switch this one on over to SQQQ. SQQQ is up 7% on the day after its nearly 3% day yesterday in just, 3 minutes? 3 minutes being up 7%, not too shabby. Congrats to all those that are in SQQQ. All right. So everything is hitting the floor. Well, yes. I mean, as that report comes out, right, the market reacts, and the market reacts in a very instant way. It's not like the real estate market or anything else like that, right? The stock market reacts and factors things in instantly. One of the things that you must understand is that sometimes reactions in the market tend to be an overreaction. So please make sure that you take that into consideration when there's huge surges of volume like this, right? But let's go ahead and break down. Can you guys see these numbers okay? I just want to make sure that you guys can see it okay before I start breaking it down. So once I get the thumbs up or once I get a yes in the chat, I will start the breakdown of this. So could you zoom in a bit? Of course. I wish I could move it a little bit more to, I guess I can, right? I'll move it a little bit more to like this side. All right. Can you guys see that okay? Will the sell-off continue? It kind of looks like it's already beginning to peak. So, but it's still bullish. I mean, it's not pulling on back by any means, right? So momentum is still in SQQQ's favor. The sell-off is still continuing. So if you're asking this because you want to buy the dip on whatever it is that you're invested in, just understand that direction is not in your favor. It is very relevant. And this is just pre-market session. This isn't even right at market open, right? So you need to remember that. But let's go ahead and break this down. So the way that I view this is I look at it in a vertical aspect, right? So this is for the month of June. This is for the month of May, April, March, February, January, and so forth, right? The two main areas where we've seen the highest rate of inflation that people don't like to include in the core inflation is food and energy. The biggest contributor, in my opinion, is energy. You can see the overall, seasonal adjustments that this thing has. And it's really just energy that's in the high double digits. If anything, electricity, or what was it, fuel oil, was once in the triple digits. So one of the things that we see is what this calculates is from the month of May to the month of June, did we see an increase or a decrease in this line item? So for this example is food. So from May to June, we saw an increase of 1%. From the month of June, we saw an increase on food away from home of 1%, right? And we go down the list and we can see an increase of 1%, 1%, 0.9%. This is where the numbers get a little bit bigger, right? And for energy, we saw an increase from the month of May to the month of June of 7.5%. For the month, for gasoline, we saw an increase of, it's right here, 11.2%. For fuel oil, we saw a decrease of 1.2%. So that's good, right? We're actually retracing back, especially, all we want to do is we want to start chipping away at these higher numbers. If month over month we can begin to chip away at these higher numbers, that is where we can see our inflation rate beginning to slow down, right? So now when it comes down to fuel oil, right, we talked about that. We dropped. So what does that mean? From the month of May to the month of June, that means that from whatever it was in May, we dropped 1.2%. Again, good. Energy services, we increased by 3.5%. For the utility piped gas services, 1.7%. This one's pretty significant over here. So all items, food and energy, 8.2%. No, this is utility piped services, 8.2%. And all items less food and services is 0.7. So this is a sum of all of these, right? So we then look into commodities and we see an increase of 0.8. We see new vehicles, an increase of 0.7. We see used car market. And the used car market was actually something for 3 consecutive months. It was actually seeing a decrease and then it began to increase once again. So that's great for all of our car resellers, but it's unfortunate for the average American, right? 1.6%. Apparel. Where is this at? I just want to make sure I have them correct over here. So apparel, 0.8% of an increase, except for tech goods apparel. We still have super low prices, right? When it comes down to medical care commodities, an increase of 0.4. Services less energy services, so 0.7. Shelter, 0.6. Transportation services, 2.1. This makes sense on why this is increasing as fuel, oil, or energy prices begin to go up, right? If fuel, energy prices begin to go up, it means that transportation services such as either public transportation and or travel as in airlines, right, it's going to be more expensive automatically. And then Medicare services, an increase of 0.7%. So as you can see, out of all of this, really the only one that saw a decrease month over month for the month of June is fuel oil. Everything else saw an increase, either pretty significant, where it would be gasoline and energy commodities that saw the biggest increase month over month. And then the biggest decrease was actually fuel oil. So, unfortunate. I actually thought we were getting a little bit closer. That's a little bit more significant than what I thought. I think it's these two. So it's definitely this area, as you guys can see, right? So this is the overall weight that it has on the inflation rate. And you can see that this whole little energy sector, so if we were to square this out, you could see that this whole sector of 38, 13, 19, 98, 59, 60, 41. Look at every other sector and section, right? 9.1. Yeah, it sucks, but it's not that bad. If we look down here, it sucks with new vehicles, 11.4. We all are aware of that. But that's moderate, not 98.5, right? Obviously, the energy sector is the sector that I think is of most concern, and I think it requires the most attention. Unfortunately, one of the things that you must understand is that, and I'm really glad that a lot of you guys are bringing this up right now because people are talking about, well, now we have to raise interest rates 1%, right? Instead of 0.75%. 0.75% was our last interest rate hike. The thing that I think people do not understand is that even by raising interest rates, the whole idea of raising interest rates is to encourage people to spend less money. If I need to go to work, I still need to buy gasoline. Raising interest rates is not going to really influence that. The Federal Reserve, they don't have any tools to be able to control gasoline prices. It's just, that is a policy that really our president and or the Biden administration needs to be put in place, right? Either with a partnership with Venezuela, with Iran, something that was talked about 2 to 3 months ago, but yet nothing has been done. We can see, right? Even if you wanted to tap into emergency oil reserves, so instead of selling oil reserves to other countries that are, definitely not our best friend right now, maybe looking into, tapping into emergency oil reserve. I understand that that's for war reasons, right? That's for true emergency reasons. I just feel like something needs to be put in place when it comes down to, seeing the weight that this energy sector influences the rate of inflation and how it's affecting Americans. You would think that there would be more of an urgency to set up some form of deal to get supply up to the same rate of demand, so then we can lower those prices, right? Because if we increase supply, we can lower demand, not lower demand, but then we can keep up with demand. And when demand is being kept up with, then there's less competition or less of a reason for gasoline companies to raise their prices. So and we've talked about all of this before. Again, the two biggest contributors is definitely food and energy. And that is what core inflation removes out of. The reason I feel like the market is reacting this way, and you can quote me on this, is I don't think it's much of a surprise that energy or food went up. I think it's more of a surprise that our core inflation went up month over month. So it ended that 2-month decrease for core inflation because food and energy are out of our control, right? Everything that the Federal Reserve was focusing on was core inflation because that's what they could influence. It's just unfortunate to see that now this time we did see an increase. I mean, we can't be perfect, right? So what was the one thing that I wanted to talk about very quickly? CPI at 9.1%. Yep. Okay. And there it goes. Market's still testing that 7% price point. We're beginning to trade sideways. Watch out for a potential breakout. It looks like it's building up a nice little breakout where it's struggling to even pull back. This is ideally what you would want if you were bullish on SQQQ, where it's not really showing any signs of a pullback. It's indicating signs of an uptrend. There it goes, 7.4%, 7.5%. It's about to test $59 a share, which means that everything else should be dropping. So everything that's bullish should be dropping. Let's see. Yeah, we're still below that resistance at $59 a share. So Twitter is still positive. I do see that pre-market. It looks like it might still. It looks like they might have. Do they halt trading? I don't know. It's not moving very much, like at all. Well, seems like they would have halted trading because of how little it's been influenced. So do you think that I didn't understand that question. So what are the CPI numbers? CPI numbers are 9.1%. So we just broke them down. 9.1%, we saw an increase of 1.3. We dropped off the previous month of June. We increased 1.3%. So right now the inflation rate is 9.1%, which has to be a new milestone. What is that? A 50-year high? Yeah, the highest in 41 years or 4 decades is, yeah. So the highest since 1981. Yep. One of the things that, again, I wanted to remind you when it comes down to this, to the Federal Reserve being able to raise interest rates, it's just when seeing the tools and resources that they have available and what they can do to influence inflation, you need to understand that core inflation, although it did go up, versus what we wanted it to do, which was actually go down, core inflation is everything excluding oil and food. I would not see why the Federal Reserve would take a more aggressive approach just because oil and food is still rising, right? They can't influence those markets. They can't control those prices. They can nearly control the other markets, but they can't control food and energy. That is why it's excluded from the core inflation. So when people list the idea of raising interest rates 1% or 2%, whatever the case might be, right? You need to understand that like the Federal Reserve is well aware of the tools they have and what it actually influences. They understand that, gas prices have already began to drop at the end of June and early July. Gas prices are dropping slowly. So therefore, they could foresee this, where I'm sure they're still going to take an aggressive route. I cannot imagine them taking a more aggressive approach than 0.75% of an increase. Yeah, I think if anything, they might even go back to 0.5% of an increase based off of, the influence that they are having and knowing that oil prices are dropping. All right. Well, that was exciting. That was definitely something that, I really thought that this time it was going to be different. I'm glad. And this is what I hope that you understand from my YouTube videos is I still have my long-term positions on Tesla, Amazon. I still bought the dip on all of those. And I'm huge on intention. Although I'm long on a lot of these different positions, since last Friday, you guys can watch my video. I uploaded another video on Sunday. I uploaded a video on Monday, Tuesday, leading up to today. And I try to the best of my ability to remind you that like these critical moments, such as when the CPI data report is released, why sometimes it's more effective to be lightly invested so days like this don't negatively influence you as much. I hope that you understand that. I know my Learn Plan Profit group does because I say this every single day to them during our live trading session of how important it is to make sure that they hold themselves accountable because no one else will, right? I can't trade for you. I will never trade for you. Other people shouldn't be telling you where to put your money. You should want to do it for yourself. And it's for moments like this, right? Where I know a lot of people, are invested in SQQQ, so you must be doing well today. But again, this is just another reason on why I feel like it should only encourage you to not be afraid to take a position, right? Just like I have my positions on, Tesla and all of these different positions that I intend to hold. That's still my goal, and I'm still going to hold those on the good days or even on the bad days, right? But that it's a light enough position that I can tolerate the bad days. And I think that's just kind of like the challenge and question to ask yourself. Is your position size light enough for you to tolerate it even at its worst days? And that's only something that you can answer. So the Fed has lost control. I don't think so. But again, we're all here to share one another's opinions, right? And there it goes. So we have 1,300 likes. So I want to see a show of hands. How many of you guys are in a position with SQQQ? So that is the inverse ETF. The Fed is red. No soft landing in sight. Again, there never is when it's challenging. I do agree. All right. How are you guys feeling about your SQQQ position? Are you going to continue to hold during normal market hours? Are you choosing to reduce position size as you're up about 6 to 7% on the day? Alrighty. Reducing half of my position. Nice. So I'm going to increase it at market open. Okay. Locked it in. Sold it completely. Okay. Playing it safe, right? So TQQQ will make new lows. It definitely can. TQQQ can sell off for sure. 2 days later, the market will be back up. Yeah, and that's what we tend to see shortly after the CPI data report is that, after 1 or 2 days, the markets do begin to recover, and or if the market went up, then markets tend to, what's it called? I don't know why my camera just died. I do apologize. Give me 1 second. I guess my camera overheated. All right, here we go. So markets do tend to recover shortly after, but again, we don't know how long or how little this bull run will last. So one of the things that we always choose to do is we like to encourage people to just be selective at overbought levels with their position size, especially during very uncertain times, right? Both bullish or bearish days. I think our overall intent is how important it is to stay well balanced in uncertain markets, right? So, hey, Ricky, has your new computer arrived? It has not. No. So yeah, that's what I was gonna actually look up as of right now is the next Fed meeting, because I know you guys would probably, right? You guys would want me to live stream that. So I know that there is a economic outlook tomorrow at 11 a.m. Eastern time. But I'm trying to see the next time that Jerome Powell speaks, and I'm pretty sure it is next week. No, it's in 2 weeks. Yeah, it's in 2 weeks. So that tends to be towards the economic report. Will not be good. Yeah, there it goes. Do you see market reaction to be a little bit of an overreaction? TQQQ overall has not made lower lows on the 180-day chart, not making those higher highs just yet. So do I view it to be an overreaction? Maybe. I mean, you can see that it's already beginning to trade sideways, which normally these bull runs last a little bit longer for SQQQ. It's just, it looks like it is beginning to slow down. I think, again, one of the biggest reasons, it's not that inflation is at 9.1%. I'm sure being worse than expected definitely does have a role, but I think it's that core inflation. I think it's that core inflation seeing an increase after 2 consecutive decreasing months, I think is what the market is actually reacting to. So, yeah. So I think that is what is actually causing maybe this a little bit more than aggressive reaction. But even then, I mean, if we do the math, this being up about 6%, because right now it's up about 5.9% on the day, that means that the NASDAQ market is down 2%. I mean, we've seen much worse days than 2%, right, in the red for the NASDAQ market. So I know for a lot of our traders, right, both that are bullish on SQQQ or bullish on TQQQ, regardless of what the case might be, we've experienced days much more significant than a 6% day. I think that, with what it's showing as of right now, I mean, there's no reason to completely sell. There's no break of pattern. I mean, it's not selling off. It's just beginning to trade sideways. So if we begin to trade below the EMA and you begin to see those lower highs and lower lows, then I would begin to kind of think of like, hey, this is beginning to show weaker signs of it still being bullish. So therefore, maybe it might be time to either reduce my position size a little bit more and or just completely play it safe and sell my position. So Ricky, do you think that we are bouncing back? I would not imagine it happened today. This is just too much of a bullish move. That would be pretty dramatic if it goes from up 6% to then in the red. I don't want to be hopeful for no reason. You need to understand that, I mean, what was just reported with that CPI data report is not super encouraging. And you just need to, again, this is the position that we put ourselves in. I saw someone ask me, why are you still holding Tesla? Why are you still holding Amazon? I'm still holding it because I still think that they're good deals. My intention was never to sell anytime soon, right? And just like I don't try to overthink it when I'm up 5 or 10% on the day, I also don't try to make myself feel worse when the market is down, 5 or 10% on the day. And I think it just comes with time, where you begin to understand that it's not how you carry yourself on your green days, but it's how you control yourself on your red days that really defines you as a trader, where red days are inevitable. Your job as a trader should never be that, I want to avoid red days. That's impossible. Your job is to simply control how much money you give back. And you tend to control how much money you give back either by risk management and or by position size, the dollar amount invested. I think that's what's most exciting. I mean, Tesla, it does suck, but it's down 2.8%. I've tolerated so much worse with Tesla. This doesn't freak me out by any means. I buy on red days, yeah. And I just don't want to say that within this video because I know we have a lot of people that might be new to the channel, and I don't want to encourage you to buy blindly. That's one thing that you'll understand from my YouTube videos is that I always just want to encourage you to do what's best for your future self, right? So one saying that we have within my Learn Plan Profit group is on my green days, I prepare for my red days, and on my red days, I prepare for my green days. And I think that this market has just really conditioned us to be able to tolerate a lot more than what we were 1 or 2 years ago. And I think that this market, as it's been selling off, really filtered out a lot of people that shouldn't have been trading, that were not conditioned for it. So if you've made it this far, I think that's a sign that you can tolerate more than the average person, right? One of the things that was said was that I think that we've experienced the worst half of the year for the overall S&P 500 and the NASDAQ market dating back since 1994. So when thinking about that, these first 6 months that we've been able to tolerate, if you've been present, if you've been invested, if you've been trading, just know that what you've experienced has been worse than everything dating back since 1994. That's my lifetime. That means that there has never been a worse first 6 months of the market since I was born. And again, you can take that as an insult, or you can take that as words of encouragement. Like LeBron says, right? You're built different. And again, my job, I feel like, is just to encourage you to try to understand what you're doing, how you're doing it, and why you're doing it. That's what I always want any of our viewers to understand. The why behind what they're doing. Why are you buying the dip? Does it actually make sense, or are you doing it just because you can? That's the thought process that I want you to go through every single time that you take action. Oh, was it Kobe that said that? I do apologize. Yeah, no, I actually thought it was LeBron James. Maybe it's just more present with him, but Traven, Jesus, man. So what's going to go up today? It looks like, well, as of right now, it's going to be, let me actually just list this. So before we close out today's stream, one thing that I quickly wanted to show you guys is how important it is to understand these inverse ETFs. So there's a SPXS. This is the S&P 500 ETF. So this one goes up when the S&P 500 market goes down. So if you like the S&P 500, then this is an option. There's SQQQ, which we've been capturing. Watch out. If these things break below the EMA, we can see a pretty significant drop. And then we have the SDOW, which is the Dow Jones Inverse ETF. That's up 3% on the day. So the reason I like talking about this is that it doesn't matter if the market is bullish or bearish. There's always an area or avenue to make money if you choose to do so. You don't always have to trade one side or the other. It's just you have an option to if you choose to. And I think that's what's encouraging. So one of the last things that I did want to remind you guys is, again, I know that there's probably a handful of you guys that this might be the first video you might be watching of me. First off, I appreciate it and thank you again for your time. Second, if you're absolutely new to the stock market and you want to ask me any questions about what platform I use, how you can get started for free, anything, literally anything at all, I hope that you know that you can always direct message me either via Discord, which is the first link in the description of this video. So if you don't see the description, refresh the video and it's the first link in the description and it's free. There's over 45,000 members within our free trading group chat, and I hope that you know you can message me. Second, you can message me on Instagram, and that should be the third link down below. The thing I do want to remind you is that is my only Instagram. I'm finally verified on Instagram. I have no other Instagram account. There's so many fake ones. Literally every other Ricky account is fake. That is my only one. So I hope that you understand it. If you ever have any questions, feel free to send me a message. One of the last things that I did want to ask you, and again, we definitely do not have to, but we had a lot of people ask for another free live trading session. That is where I trade live at market open. We can do that for about 30 minutes to an hour. I was thinking of hosting one maybe on Friday. So it's one of the reasons I have to close out this live stream in about 10 minutes is because I'm about to go trade live privately for my Learn Plan Profit group. So if you guys want me to host that free live trading session, right now we're already at 1,700 likes. So if this video can get to 2.5K likes, so less than 1,000 more, right? There's enough of you in this video that can like it. I will host a free live trading session on Friday. You don't have to sign up for anything. You don't have to do anything special. It's just, again, drop a like, subscribe to the channel, and turn on your post notifications. If this video gets over 2.5K likes, then again, I just want enough people to show up that it's worth it for me to host that free live trading session. And that's really just it. So it looks like you guys already got it to 1900. I don't want to overcomplicate things, but one thing that I do want to remind you is if you don't even want to wait until Friday and you're ready to join my team and you want to watch me trade live in the next couple of minutes, we have a $100 off coupon. It's the second link in the description of this video, and it's all inclusive. So it includes our live trading, our A to Z lesson library, our private group chat for LPP, and yes, it also includes access to the TechBuds Trading HQ, which is our headquarters in Chandler, Arizona. It's all inclusive. It's a one-time payment, lifetime access. And again, right now it's $100 off if you feel like you are ready to join our team. And again, that's that second link down below. So I'm going to close this video out just so we can get ready for that live trading with the LPP team. And I'm going to pretty much leave it at that. We are running a giveaway. I don't know if you guys have seen it. It's for Shop TechBuds. We're going to be flying out 3 people who partake in our giveaway. And we're going to be flying you out for a 3-day staycation to Arizona. You're going to be staying at one of our Airbnbs and then spending time with me and the team. So this is going to be from August 23rd to August 25th. So if you want to learn more about the giveaway, click the 4th link in the description of this video. And yes, it's for the Shop TechBuds. There's a whole breakdown on everything that's included, what to expect, and it's super simple to enter the giveaway. So I really do appreciate you guys' time. I hope that I earned your thumbs up. Please consider subscribing if you feel like we've earned it. So how much is LPP live trading session? Well, it's all inclusive. So it's $100 off. You can click that second link down below and it will break down everything. It's all inclusive. There's no monthly payment. There's no yearly payment. You have access to every live trading session moving forward and also every live trading session that I've ever had dating back since 2018. So if you have any specific questions that you would like to ask me, then again, just message me via Discord and all the information can be found in the description of this video. I appreciate you guys' time. Like always, let's make sure that we end the year on a green note.